Hey everybody, Luis with the DiGonzini Real Estate Group here in Orange County. We are back. So today we're going to talk about what's happened 2 days ago. 2 days ago, the Fed announced a third increase in interest rates in 7 months. So we're going to talk about interest rates. Now, I'm not a mortgage broker, I'm a real estate broker. For this, I know a little bit, but not enough. So we're gonna talk about the basics, how this is gonna affect your purchases, your sales, and your investments. Why? Because that's what I do. I help people buy, sell, and invest in real estate. So we're gonna talk briefly about that. If you want more information about it, or if you wanna sit down for 30, 45 minutes to talk about this and talk about this rate increase might affect your investment, give us a call. So here's what's gonna happen. Right now, as we're speaking, 3 rate increases in 7 months. The last increase has not taken effect into the market yet, but it will happen soon, probably 2 to 3 weeks. You'll see. I hope I'm wrong, but it's coming. You have to be prepared for that. If you're buying, you're gonna end up paying more for the same house that you can buy right now, or that you could have bought 7 months ago. So what can you do now? Experts say the rates will continue to increase. So if you want to buy in the next 6 months, my recommendation is that you talk to your lender, you get ready to purchase something now rather than later. So that's one thing. If you wait, or you can wait long enough, maybe next year, but I don't know what the market will be next year, and I don't know what the rates are going to be next year. So that's if you're buying. So buying. Same house, more money. 1% increase. It's about, based on the average home that we have here in Orange County, that's gonna be about $100,000 more, which is a big, big difference. So be ready for that. Number 2, if you're selling a piece of property, if you're selling an investment, one of the things that's gonna happen is, since inventory is going to start to go up in the next few months, we're going to go into the fall, and the real estate cycle normally does this. So I would say this is July, this is January. So we're going to start trending this way, but one of the things that's going to happen is the rates are going to be higher. That in turn is gonna change the market. So prices of the market, we're gonna start seeing go down a little bit and adjusting. They're gonna adjust. So it's not like we're having another recession, but eventually they're gonna adjust down. So if you wanna sell a property, you probably wanna get it on the market as soon as possible. Even though the rates will go up, you can still make the most money possible in this market. Actually, the most money you could have net in the last 6.5 years. We have had a seller's run for the last 6.5 years, which has been awesome for sellers, for us, for anybody involved in real estate. But I feel that's about to change. It's going to shift a little bit. Prices will probably stabilize. People will still buy and sell and invest in real estate, but it's going to be at a higher cost. Why? Because of the rates. In just a normal market, if you go back through history, this has been happening for the last 40 years. So be ready for this. The recent rate increase is going to affect our market, whether you like it or not. So what I would recommend to you is 2 things. Be ready and talk to somebody that knows. Talk to your real estate broker, talk to your lender broker. Be ready now, and we will see you soon.